So hello guys, hope you're good. Sorry I'm late, niko mahali kidogo. Just waiting for people to join in. Hello. So we're going to start off. Let me just start off. Today we are going to talk about entries, exits, and noticing reversals, and generally how to do technical analysis. It's not hard. So let's start off. I'll start off with the V10. Here I'm going to start off with V10. V10. I'm dealing mainly with volatility. Maybe I'll come to Forex later, but I will deal with volatility because it pays a lot. It really pays a lot, and you only need to be making $100 per day. That's enough. Making $100 per day every day in volatility, it's very, very much possible. So I'm going to show you how to do technical analysis. Let's start off. The first thing you do in any currency or indices, the first thing you do, you find support. First you find the resistance and support. The support is the lower side of the market, the resistance is the upper side of the market, and then you identify the pattern. For our case here, we have a bearish flag on weekly, so it's an indication V10 is supposed to continue selling completely for a long time. And let's see where it's going. Then you take a trend line from the lowest position to the second lowest position. Let me zoom in. You take a trend line from the lowest position to the second lowest position. From the lowest position to the second lowest position. As you can see, that's a bearish wedge. This is a bearish wedge on a weekly level, so indicating the rest of the weeks, the market has been consolidating here since 22nd August 2021. So the rest of the markets are supposed to sell this distance downward. You measure in between from here to here, then you will know where the market is supposed to go. V10 is supposed to sell completely on a long-term level. So you measure the distance from here to here. Then you place your arrow where the market has broken. Our market has broken, as you can see, our market has broken this line and then retested. So you measure the same distance. You place the arrow where the market has broken. Then you place a trend line where the arrow first touched. This is the target of V10. V10 is supposed to come up to here. But the first target is this support. As you can see, the market is targeting this support. So the first take profit will be up to here. Then the second entry, let's say we had our first entry from here to here. Our second entry will be from here to here. But that's on a weekly level. So let's find an entry on a daily level. As you can see, our market broke. Our entry was on a daily level because the market broke and then retested, but they must retest up to here. They must touch here, and then the market is supposed to sell now up to here. This is the first target. If you miss out on this entry, Let's say if you miss out on this entry, we have a second entry. You draw the support and the resistance in between. As you can see here, we have a reversal. The market touched here and then reverse. So another entry, a safest entry will be once this line has been broken. Our next entry will be once this line has been broken. And you don't need to overtrade, you just need to place one trade with the lowest lot. For V50, I use lot size 2. That's not volatile, but it pays a lot. So if you miss out on this entry, we have another second entry here where this market is supposed to sell up to here. That's it. Our clear confirmation will be once the daily candlestick has broken below, because you can't make an entry unless this market can get here, then buy up in form of a double bottom. But a safe entry will be once this market breaks here. So let's go to another one, V100. V100 also pays a lot. Just using the lowest lot, it pays a lot, but also very manipulated. V100 imemanipulatiwa sana, and if you're not careful, you can go against a trend. V100, if you go against a trend, you will miss out on a trade. So let's start off with V100. Let's see how it goes. V100 is on a long-term buy. I remember the last time I was here, I gave this buy on a long-term. And it's up actually buying. It's supposed to buy. It has a Quasimodo head and shoulder, but I'll explain how it's traded. Quasimodo head and shoulder is a head and shoulder, but where the neckline of the head are not equal. One is slightly longer, but I'll explain. Let me just do analysis, but I'll explain. Now, the first thing you do, support and resistance. The first thing you do, you draw the support and the resistance. The support and resistance. Let me hope my video is clear. If you're not getting anything, you can tell me, or if the video is kind of blurry, you can tell me. So first thing you do, support, resistance. This is the resistance because the market got here, resisted, fall back. This is the support. The lower side of the market is always the support. The lower side of the market is the support. And as you can notice, V100 broke this support and then came back to retest it. Let me zoom in. V100 broke the support. Let me put on our weekly level. V100 broke this support, then came back to retest. So the market has reached a resistance point. An entry will be a safe entry for a buy. Now let me show you the Quasimodo head and shoulder. Is a head and shoulder where the head is slightly, the head and shoulder are not equal. It's the same thing as a head and shoulder, as the straight head and shoulder, but the Quasimodo head and shoulder one is kindly slanted. As you can notice, the first neckline, the reversal was here, but notice the second head and shoulder, the second head neckline, it was a bit longer. This is a Quasimodo head and shoulder, where the neckline are not equal, but the shoulders must be equal. The shoulders must be equal. So a safe entry for a buy will be once this line has been broken. As you can see, we are on a resistance level. This is where a safe entry will be. And the safe entry, you'll have to wait for the weekly candlestick. Every weekly candlestick is formed on Sunday. Every Sunday morning, the weekly candlestick is formed in volatility. Every Sunday morning, the candlestick for the weekly level is formed. So the rest of the weeks, if they break here, the rest of the weeks are supposed to buy up to here. And with the lowest lot, I had seen with the lowest lot from here to here, it's paying around $3,000. That's around 360K with only one trade, 0.20. So hopefully we'll get a target. We'll get an entry, sorry, for that. And then let's see on the daily level. Another entry will be once the daily candlestick. But it's kind of small, so the daily level it's kind of small, but the weekly candlestick indicates clearly it's a Quasimodo head and shoulder, and it's supposed to buy up to here. That's it. So let's move to the next one, step index. Now let me do V50. Let me do V50. V50 first. Let me do V50. Now, the first thing you do, support. Always, it's very easy. Support, resistance. Always notice where the foundation of the market is laying. The lower side of the market is the support. The upper side of the market is the resistance. Then you take a trend line from the lowest, position to the second lowest position. That's it. First of all, identify, this is on a weekly level. Always start on a weekly level. Identify the pattern. Always look, if you want to notice the pattern, always look left. Look on your left side to notice where the market is coming from. If it's coming from below, that's a bullish trend. But if it's coming from above, this is a bearish trend. So V50 on a long-term trend, it's on a sell also. Now we measure this distance. We have a bearish wedge. This is a wedge because it has formed a triangle. This is a wedge. We measure the same distance from here to here. And then you place it on where the market will break. Now, point to note, your entry will be once the weekly candlestick has broken below, because as long as it's on above here, it can buy, because this is the buy zone. The lower side of the market is the buy zone. The upper side is the sell zone, because the market got here, bought, so the same thing can happen here. It can get here and then buy up to this target. So a safe entry, the market can buy from here to here. Let me adjust my laptop. So the market can buy from here to here. But unless it breaks this line, this will be a safe entry for a sell. The first entry for a sell will be here, after this line has been broken. Now let's go to daily level. Let's see how it's playing out. On a daily level, we have a consolidation here. This is a consolidating market. And then always look left. The market came from above and then entered a bearish flag. This is a bearish flag. The market came from above, then consolidated in a channel. You take an equidistance channel, then you measure from the lowest position, no, the upper side, from this point here, here. Hope my video is clear. If it's not clear, you can say. Then on the lower side, There. What do you see? We have a bearish flag. This is a bearish flag. And then any line broken must be retested. Any line broken must be retested. The same thing with the V100. Let me show you V100 here. If this market breaks above, this line, they must go a bit up, then go back to retest. A retest is a must. Retest lazima ifanywe. As you can see, wamefanya, wali break. They broke here. They broke this line. They came back to retest on a weekly level. So if they break this on a weekly level, so it indicates there a few weeks they will buy and then reverse back to do a retest. As you can see for V50, we have a bearish flag. So it's a clear indication of a very long sell. The rest of as you can see, it's selling. It's already selling because they have broken this line and then made a retest. So they're supposed to travel this distance from here to here because we have a bearish flag. They're supposed to travel that same distance of the flag. You measure in between the flag. You measure in between the flag and you place it kwenye market imebreak side ya chini. So our first entry was here. Our first entry was here. And please take notes because it's not hard. I'm showing you how to trade patterns. You can take notes, ask questions. And also I'll share my Facebook page, maybe, for most of you who want to reach out. Because mostly I'm not active on Madam Forex page, so maybe you can find me on my page. But I'll share that later. So the first target is this line. The first target is here. This is the distance of the channel. From here to here is the same distance. The market will travel from here to here. Now, an entry, a safe entry, because the market is already moving. We have already missed out on the first entry. The second entry will be this line. Remember our weekly level. Let me show you. Our weekly level, we had a bearish wedge. So the safest entry will be here. The safest entry will be from here to here first. That's the first take profit because that's the support. That's the first support. Then a second entry. This is how you find more entries kwa market. This is our second entry. Our second entry will be because of this support. Hope you're together up to there. Then the final target will be here. The distance of the wedge. Hope I'm clear up to there. Then we do the next one. I'm doing this last one. I'm not going to exhaust much. I do the last one. Step index. Another profitable indices. It pays a lot. And that's why I told you only need $100 per day. $100 per day, you're good. Because on a monthly basis, that's around $3,000. It's very possible if you're a day trader in volatility. Only $100, you're out of the market. Tomorrow, find more entries, you'll make that. So we do step index. Let me wind up. First thing you do, support. You first find the support, as always. You first find the support and resistance. The support is the lower side, the resistance is the upper side. For our case here, let me take it on weekly. For our case here for step index, let's see what it had on our weekly level. On a weekly level, we had a consolidating market. The first put trend line from the highest to the lowest, then also on the upper side from the highest to the second highest. As you can see, this is a bullish wedge on a weekly level. So this market was supposed to travel the same distance of the bullish wedge on a weekly level. Then you measure the same distance upwards. It's the same. You see, the weekly level broke here and then traveled the same distance of the wedge. And then once the wedge is completed, you have to go back and do a retest. So possibly step index is supposed to fall up to here first to do a retest, because they broke a wedge. So they have to go back and retest. Now let's find entries. It's a sell. Let's find entries. Now we find support. This is a support. Notice any line broken must be retested. This is what I mean, a retest. Every market broken must be retested. The same way they broke this line, they have to go back and retest here. But there are other lines which have to be retested. This was our support because our market was playing in between this channel, and then they broke below. They must retest. If this market closed above here, let's say this market closed above this line, this would be the next target. If step index closed above, this would be the next target. Now, for our case here, they closed below, indicating any market below here must fall down to the next support. Look, our market came from here, started buying from here. So definitely this market is supposed to come up to here first, then fall to the wedge. It must complete the wedge. Now let's find entries. Let's see if we have entries. This is on a daily level. They have formed a reversal candlestick. So I'm going to teach you a new candlestick today. This one is called a dragonfly doji. This one is called a dragonfly doji. In volatility, it indicates instant reversal, maybe from a buy to a sell or from a sell to a buy. For our case here, the market was buying, so it was an instant reversal from a buy to a sell. Just look. And it was formed at a resistance and support. They are usually formed at resistance and support. This one, hope you can notice it. The body is kind of slim. Let me give you the characteristics. The body is slim. It has one short wick and one long wick, but the body is slim. This is a dragonfly doji. It indicates instant reversal. Then I'll show you another one, a long-legged doji. Let me show you a long-legged doji. This one is a long-legged doji. This one. It has one long wick, small body, then one short wick. It indicates an instant reversal. And you can see step index was buying. And then formed the long-legged doji, and then it reverse. It indicates instant reversal. So that's it for today. I'll share my link on the Telegram page and also on Facebook. You can join my Facebook page if you want. And hope to see you soon. I'll be doing more live videos on technical analysis. And have a good day.